So while you may have missed our free SIT training today, don't worry about that. I got something special for you. Now, this level of precision is going to be very similar to what I used to do when I gave out free trade alerts over the last 10 years, you guys know, on here on YouTube, on Facebook, and Instagram. So you want to make sure that you watch this entire video until the end. That way you can take advantage of this Euro USD pair. And listen, for those who missed out on our free Stay in Your Trade Strategy event today, you have nothing to worry about because I got you covered too. We're having another one next week. On top of that, you can sit in on this one and see exactly how I analyze the charts. All right, so I'm going to go ahead and analyze this US pair, it's a Euro USD pair. When I was setting up for our free Stay in Your Trade Strategy training today, I ran across this setup and I wanted to talk about it. All right, just a little bit about the Euro USD. It's a very liquid pair, all right, which means that, you know, you can literally open up a trade and almost fall right into profit like right away because the spread is very, very tight. Some cases like hovering around one pip. It respects key levels effectively. All right, I like that. You guys are doing big on levels, and then also it's not your fastest, but it's also not the slowest pair. It's not your snail pair like your Euro Swiss, but it's definitely not your GBP NZD, anything like that. So I think it's a great balance. So if you guys remember, there was a video I put out that's buried in all of the videos that I have back in, I mean, this is years ago, maybe 2015 sometime, where I did 863 pips in 12 hours. All right, you can check that video out. That was all on the Euro USD, and I was scalping the market then. All right. So I'm going to show you guys what I'm looking at with this pair. I'm going to break this down based on VPAS to give you guys my thought process. This is how I trade on the market. All right. So you guys know this market was traveling downward. All right. And the way you're supposed to trade is you see the market going down. You need to ask yourself, okay, where is the, since it's going down, where is the support level that the market is going to go to? So you do that by looking back in time, look, you know, back test and see all the levels that the market may have respected in the area of price action. So let's just say you came to the market right now. I'm going to put a level right here, okay? Because whether or not I saw it coming down to this level, whether or not I recognize this level ahead of time, I see now that the market came here and this is where we are. So this is what I'm going to expect about this market and why. So this market came down, nice strong run down here. It came down to here and it backed all the way up to here. Now, first things first, there's a reason why the market did this at this level. And I need to go investigate, okay? And I'm going to also put a level right here because it's like, I know that it's a reason why it stopped here. It could have stopped anywhere, but it stopped here. So let's go back and let's see, why did it stop here? Okay, got a little back and forth here. Oh, okay, I see. Nice zone. Okay, came up to here, bounce. It makes sense. Okay, makes sense. If there's anything, I see that. Nice pivotal place here. Nice run. From here all the way up to there. Okay, that's great. I see that. Almost came down to this level. So basically what the market did, it ran down to here. Didn't quite hit it. Came up and came back down. Came up, came back down to the level exactly, and then it ran up, okay? And then it came full circle, and you can see over time it came back to this place and it's back here now. So now let's analyze this market based on what happened afterwards, okay? So this market came down to here, backed up to here. So we did our investigation and we see that there's a reason why the market came to here. So now I know why. So now I'm going to expect the market to run up, okay? Now, since then, the market did gap up. It ran up, whipsawed this day, closed here. The next day, same thing, whipsawed, it went down some. The next day, it did run up, and then the next day, it dropped down. Next day, it went up. Next day, it gapped down, went down. So now I see that we have something going on here. All right, the market came down, came up, came back down, went back up to the same place. Okay, so I see a reason why the market may not go higher, but then the market, well, at least not right now, then the market opened this day, went up, whipsawed, and it dropped down. came down, dropped down further, back down to here. Now, this is where you got to pay attention, okay? Whenever you have a large candle like this, and the market chooses not to continue thereafter or the next day, you have to ask, why did the market not continue? You need to investigate. And the reason why the market did not continue is because of this. It's a level. When you look left, you saw that the market respected this zone here multiple times. That's why, okay? So if you were like me, looking for an opportunity to trade the market, I would stand by and wait for a buy opportunity, okay? Some people may already be in on this trade because the market, instead of going down as it should have, if it was supposed to, all right, let's say if it was supposed to go down, it did not. It ran up, pulled back, and it created confirmation that we're no longer going down. So you had this over here, but this served as confirmation, this candle. So logically, my thinking is, if you had a strong candle like that that went boom, and it chose not to go down any further the day after, that tells me that this was a fake out day. This is just a day, one strong day came down to this level. Why? Because it's a level, and there was no continuation, so it's not supposed to go down. And since then, it's been going up. And it's been riding this level. And even Friday, yesterday, the market closed just a hair higher than where it closed on Thursday. So with this type of price action reading, or this, I call it visual price action, going from one candle to the next, reading the story behind each candle, all right? It's telling me that this market should go north. So if you're trading on the market, it's not that you should get in, ride the market up, because obviously the move to the upside, you already missed the opportunity to get in. This is just my analysis on the market going up. Okay, how far up will it go? I don't know. We'll have to see. But if I was trading this, I would have already been in because you had confirmation as to it's not going down. All right. So this type of analysis is what I provide my students. This type of analysis is what I use for my own trading when I trade on the US30. All right. Hopefully this makes sense to you guys. You guys have nothing short of a fantastic day. Peace and blessings, everyone.